Michael Saylor, I have one question, and it pertains to when I'm talking. Scotch on the rocks, booze breath, Jerry Pow Pow sodomizes the market into a bearish bloodbath. But did he just do us all a huge favor? Bitcoin, crypto, morning tea, hey. Good morning, everybody. My name's pianomattyb. That is Scaramucci's. This is your morning TA. A brief glimpse into the crypto markets where the sun's shining, where the wind's blowing. Oh, the humble opinion of this piano Zamboni bringing the data. The FOMO index has dropped down to 75 from yesterday's 81. Bitcoin dominance 57.1%. 24-hour volumes 262 billion. The overall market cap 3.53 trillion. Give or take 100 million. Well, all this talk of cool-offs and overbought this and overheated that brought in the gods of bearish delight and collapse the market. I mean, we had a 7% drawdown. Normally, we wouldn't even call that a dump. But these days, we're all a little on the edge of our seats, wondering what, when, or if a peak has, will, or is going to happen. Yesterday, after old Scotch on the rocks, booze breath, Jerry Pow Pow uttered the words 25 basis point decrease, the markets threw up their arms in disbelief and began to sell off, crashing through our old channel of eternal monotony's resistance, which was acting as support, then through the 50 moving average, finding a bottom and a bounce at 98.7 and has clawed our way back up to a time of production 102K, right under the chinny chin chin of the 50 moving average, and carving out this cute little bear flag whose price probability does play out to way down at 95.7, which is also this channel of eternal monotony support. So there's double word score at that level. My heartbreakingly optimistic outlook for today would be to continue to recover rally back up and over this channel's resistance at 103.4, which is also the Siggity 1.8% fib, which is our min barrier of bullishness. Over the Siggity 1.8% fib, we're bullish. Under her, we got the bad bear breath in the morning. Now over on the ding dong, you can see we did carve out a quadzillion bearish engulfing candle. A bearish candle that engulfs the past 4 candles, running straight through our channel of ascension, throwing a drunken 30-year-old crying birthday girl wick under the 20 moving average, but has tucked herself back up and into this channel, which is essentially what we've been doing for the past month. So although the blood on the streets was aplenty, it wasn't bearishly out of the ordinary. And in fact, the only thing that was off script was the daily summitization of an all-time high. What I'd like to see today is the carving out and closing of an Uno reversal bullish engulfing candle, closing today at or above 105.9, which would shake all the bears out and put them into hibernation for at least the weekend until they're Meds wear off and they start jonesing for a short fix to clear out what's left of their portfolio. Would you look at that, my friends? The sun's up. It's another beautiful day here on planet Earth, a day none of us are guaranteed. We're not guaranteed these days, yet we're lucky enough to have anyway. So get out there, knock 'em dead, and remember, we're playing the same game as our psychopathic elected leads. That's right, it's the long game. So zoom out and have a fantastic day. And we'll be going live right away, so grab yourself a coffee, join me for a quick one, and by all means, sing it with me now. Around the banks of spoom, around the banks of boom dash bang, Bitcoin, crypto, morning day, hey, ching. Shouldn't have opened me big mouth the other day. Kept on going on and on about, we're too overheated, we're overbought, we need a capitulation event, etc., etc. Well, I guess, you know, the market gods were listening to this channel, right? And it's like, yeah, well, pianomattyb is calling for a little bit of a downtrend, so let's give it to him. And then next thing you know, I think we said 97 point something yesterday. And the live stream would be a decent capitulation event, and it went to 98 point something. Anyways, that wasn't supposed to happen yesterday. I thought it would be, you know, maybe in the next couple weeks we'd see something like that. The Lord love a duck. You know, 6 hours later, after old Scotch on the Rocks, Jerry Pow Pow uttered those words. 25 basis points decrease. Really wasn't that. See, the thing is like we're at such a sticky part in the market, because as euphoric as it can be, it's weighted with a heavy dose of skepticality and fear. Because all-time highs, you know, we don't exist on all-time highs for a long time. So every potential all-time high is the next peak, so to speak, right? So as much as we're euphoric for the peak, we're like, what? That was a great peak, but is that it? Is that all we're doing? Is that the end of the bull run? And then, of course, the rhetoric, he said, we can't own Jerry Papa, we can't own Bitcoin. That's just BS. You got to remember, the Fed doesn't work for the government. It works for a concentric circle above the government. And they all own Bitcoin because they all have NASDAQ in their little portfolios, right? So whether they say that Duke was coming in there. Whether they say they do or don't, they do now. Because of the NASDAQ. I guess maybe not right now because of the NASDAQ. I guess Monday she opens up. We'll see what happens there. Maybe that might be the oompah that gives that Santa rally, or maybe we already had the Santa rally. I mean, we went to 108. We went to 108K. That is a nice Santa rally. We weren't even supposed to get over 100K by 2024, but we did. So we're counting our chickens, maybe a little too early, and then we get, you know, when you count your chickens too early, you get a little skeptical. You start thinking, well, maybe things are a little overheated, and sure enough, things were a little overheated, and they came down. So it's not the biggest deal. My question is, did we come down enough? I'm not sure if we did. You know, what is this? This is a 95.7 is where this cute little bear flag plays out to. Double word score on it. Just happened to be exactly precise where she would play out. Now that would be, as painful as it seems, more of a plausible reset. Whether we see that or not, I don't know. This is a pretty strong wick. This is your quintessential bounce wick when we hit that bottom and bounce up. Now we are getting a little bit of pushback from the 50 moving average. We got to get over it. Like, as far as I'm concerned, if we don't get over this 103.4, we'll probably go back down to 95.6. Holy smokes, Carl Elder. He's gifted 5 Piano B memberships. Thank you so much on this Thursday as the market is deep in the red. Carl Elder makes her green. Thank you very much, Carl Elder. Keeping the lights on in this old this old small channel on YouTube, this boutique community. He says, "Stay strong, Diamond Hands, boutique community." Yes, yes, yes. No doubt. Someone just commented to me today. He said, "Remember the bear market? How hard it was to make content because it was doing nothing." And I said, "Yeah, it was hard, but I would argue that all-time highs is even harder to make content because you're really in price discovery, right? So there's no historical data to, all there is where it might come down to, right? Which is, not what people want to hear after an all-time high, but really that's all there is to go. And then the delusional upsides, maybe after this all-time high, we'll hit another all-time high, right? That's what everybody wants to hear. But we don't mince words on this boutique community here. We tell them the straight data, whether it's good or bad. It doesn't matter because this is all noise, right? This is all noise. The market goes up and down. Just doesn't go straight up, doesn't go straight down. It moves in oscillations. And that's all we can really, turn your mind off and wait for 2025. I think April 2025, I'll be, squint-eyeing the market a little more. Until then, I just think, we're going up and up and up and up and up. And then come April, I might take a hard look at where the market is. Now, some things that may or may not happen could affect it. The day January 20th will be interesting because there's a lot of day ones that will change things. So if a lot of day ones don't happen, as something as easy as if he doesn't release Ross day one, that's an indicator. It's not an indicator of him what he wanted to do, but it's more of an indicator of what he can't do, right? Because, like I said, just like the Fed, the president doesn't work for the government. Once he gets in, he works for a small little concentric circle above, right? So what he wants to do and what he can do are usually two different things, but if he can't do it, we'll know he can't do a lot of other things, right? So the big FUD yesterday was Jerry Papa on the we can't own Bitcoin. That's BS. Maybe the Fed can't. Maybe the Fed bank, but who cares? It's not the Treasury, and the Treasury still can. So it's just like people hear things and they kind of make their own bearish rants, so to speak, and it's like it makes no difference what's going on there. Let's take out the ding dong here. As you can see, we are just oscillating from support and resistance. Bingo, bango, bongo. This is 30 days. This is a whole month. That's it. So to come down and retest it is absolutely normal. Now is a little aggressive. A little one quadzillion bearish engulfing candle all the way down. Yeah, it's a little abrupt. We would have maybe a couple days, maybe spend the week kind of slowly moving down, doing nothing. But then again, I'd prefer just to rip off the Band-Aid, get down there, maybe reset the charts. You can see, look at this. We close the candle right at the 61.8% fib. Can't make that up, right? The universe loves the
61. Let's just take a look at how many days this is from. We started doing this, to be precise, is 38 days. So it's 8 days over 30. A big deal. It's basically what we've been doing. And to a certain degree, it's bored out the market. I know it sounds ridiculous. But as price went up, people got more bored and more bearish. It's like every day it got up, people got more bored and bearish. It's almost an inverse reality we're going through here. It's like, I guess it's a mirror to the fact that retail essentially is not here, and that's fine. This isn't like I've been saying this for the whole time. This isn't a retail market anymore. This is an like when you have institutions buying hundreds of millions of dollars on a daily basis, we've left the retail behind a long time ago. What are they going to do? How are they going to compete with that? They could have the most bullish retail day ever, and then an ETF or, Michael Saylor will come in and just bulldoze them out of commission. Now, to the upside, it's always a headwind when it's going up, and it's, I don't really think the tailwind comes with retail, because we'll see that maybe in the peak they will become the exit liquidity on the way down. Unfortunately, that's basically retail's role in life, is exit liquidity. This will be who's texting me. So look at this epic on the weekly. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. 7 out of 10 have been green weeks. That's a hell of a weekly run. 7 out of 10. Now the candles are getting shorter. Just noticing the obvious. The candles are getting shorter. We're getting more wicks. These are bears attempting to push it down, getting bought up, right? But you don't see the wicks on these massive candles. The bears are in hibernation. But then when they smell blood on the streets, they start trying to push. And yes, they do get exhausted. But one of these pushes, you see this? Look at this, how we're following this little guy up here. It's almost spooky, right? So can we consolidate here? Well, it would make sense that we would consolidate for the next 2 to 3 weeks, because we have the holidays, we have Christmas, we have New Year's. Generally bearish, not like Dumpy Dumpenstein's bearish, but just like boring bearish. Like there's not a lot of bulls coming in. And then there's a couple of bears who are like in their parents' basements, all hepped up on goofballs, trying to do shorts, right? Well, maybe if I short, I might get a girlfriend, and that's going to happen all the time. And so we could sit around here, and then what I would kind of expect is that Jan 1 to 15, a little bit of a dump, moving into all systems go until April, May. That's what would be normal. I mean, that's what wouldn't surprise me to see. And it would follow this arbitrary little yellow thing that I drew here. You know how accurate my little doodles are. They basically push the market. When the market is in a decision, it just comes to my channel. It's like, well, where did his yellow marker arbitrary doodles say? Oh, really? We're just going to sit here and consolidate, then dump? Okay, well, hey, that's as good a direction as anyone could maybe take. Now, do we see 95.6 play out? Well, when you look at this, the MACD on the 4-hour chart, she looks like she's in reset zone. I like that. It's a 4-hour chart. She's a little bit of a noisy little so-and-so. The ding-dong, there's been bearish divergence this whole time, right? And this is indicative of a bull market where we're kind of fighting some traditional lagging indicators. We got price action making higher highs and the MACD making lower highs. That is, now in a bear market, this would just tank us to oblivion. But because we're in a bull market, we're fighting that. Even now, we are 102.3, so we have to get, this is my ideal 5.8. Can we, like, I mean, it's funny how fast sentiment just goes into the tank because we're not starting from a completely bullish euphoric. We're almost starting from a I don't believe it type of scenario when it comes to all-time highs. So to come back to 105.9, it seems like it's crazy out of reach, right? But we're dealing with the law of large numbers now. So psychologically, right? Everything's moving. We now have a relation to large numbers, and usually, 101, 102, 103. Now, if you can remember back in the 60s, 70s, it was always 70 point something. Right? Oh, we went from 72.8 to 71.3. Those were important numbers because they were smaller. Now we're just kind of running through $1,000 benchmarks. So it seems more violent, but it really isn't, because if we just do a quick little, let's see what this red candle actually was. 5%. It's a 5% red candle. It's not that much in the big scheme of things, especially because, we're used to 30%, right? Now, 30% would take maybe over a week. I would hate to see that in a day. However, man, it would tank the fear and greed. It would put it into fear. It would reset the RSI and reset the MACD. Now, I really think that we're gearing up for a major turnaround in this MACD, and we'll probably see who's texting me start going up pretty soon. Now, pretty soon, you see, when you have a low time horizon, a long time horizon, pretty soon means in the next month to me. I never think things are going to play out tomorrow or the day. However, yesterday it did play out in 6 hours, but there was a catalyst there. There was the FOMC meeting that was going to have volatility. Now it could have gone up or down, but essentially when the market is kind of overheated and overbought, it's almost looking for anything just to refresh. Oh, he said there's only going to be 2 cuts next year. Dump it, refresh it. God damn it. We waiting for this for 3 months now. And then it does. Now, the thing that you have to remember about all this rhetoric that concentric circle spews out is that what they say now means nothing, because every month's data changes what they're going to do. So they could have said the other thing. They could have said, we're going to have 4 rate cuts. Right? And then it would have been bullish, but then the data comes out and then they fudge it, right? Because make no mistake, they're the fudge masters. Whatever they want to do, they will kind of, fudge the numbers to make it look like they had to do it. So the question is, what are they trying to do? And will they do it? Make sure you like and subscribe.